you have to be a little bit more careful when you're taking positions. So today, what we can do in that regard is we can look into assets, that that might currently be aligned with the seasonality. Then we use probability for, for support. Then we can look for news in regards to these assets, making sure that there isn't any news that will be hindering us negatively because we do not know what, the COT is saying. Keep in mind, COT is kind of like the third dynamics that give us live information. Seasonality is already previous historical information, and probability is future information, and COT is information of the now, even though it's kind of in the past, like a week lag, but it's kind of in the now information. So the strategy consists of three-way strategy, and guys that have been with me for years already knows this, which is we look one into the past, which is seasonality, two into the future, which is probability, and three into the present, which is COT, right? So that's the three strategies that we currently use. But without the present, we cannot know what the future is going to say, or can we be sure of what the past might repeat itself, if the past might repeat itself. So we have to know the present, right? So that being said, we're dealing in just 2D right now, which is the past and the future. We don't know the present. So the present, you can get your information from news, and you can get that from Forex Factory. Let me see, Forex Factory. So you can get that from Forex Factory, or any other news sources you use. I mean, it's up to you, quite frankly. But Forex Factory do have a news section that you can check news on. I also recommend, if you can, use Yahoo Finance for some of that. So you can see some of the news that will be right here. Some were posted 4 hours ago, 7 hours ago, and then calendar, you can look at your calendar for what's most likely going to happen. As you can see, CHF has a CPI, Consumer Price Index, coming in on Monday. And, all the rest kind of have like, low news, not high impact news. So keep that in mind. This time around, we're going to be looking into assets that way. Now, has anybody looked into gold recently? Because I don't know if I've spoken about this year, but gold seasonality moved, brilliantly. Let me just go. By the way, I've been analyzing some stocks as well, but just a little bit of diversification. Yeah. Beautiful. And you see how gold has performed so far, right? It's actually performed beautifully this year around as well. I mean, whenever there is war, and this has happened not just once, it's not twice or three times. Whenever there's war, gold tends to tank. And if you looked at this, for example, we're expecting gold to start moving from December around the 14th and going up until February, January 1st, and then up until February, right around 20th. So 20th, 23rd. But currently, right now, what we've seen, I think we've seen this dip happen, this dip right here, because it doesn't really align too much around these spots anymore. It's kind of looking like consolidation in the 47 years, but these guys look like uptrend. So what's happening now is gold is getting to the end of its trend, and you can actually see that play out live in the chart. It's getting to the end of it, and what's most likely going to happen is we're going to see that reverse back, coming back down. AUD, okay, I'll look into AUD, USD, AUD. I'll look into those. That's not an issue. 2 seconds, please. Apologies, I was just readjusting the microphone. Yeah, I'll look into that. Look into US 30 also. Yeah, I can look into US 30. I do have some new data coming in on probability, but I would have to check if I have US 30. Give me a moment. I'll scan through the computer. After I do the AUD, USD, and Euro, I will see if I do have one for US30. All right, just give me a moment. So let's look at AUD, USD, and Euro. The first thing we're going to just do, we're going to put Euro, AUD, USD. Now we're gonna look at them individually. And for the guys that know what's up, it's always good to look at them individually, because when you look at both of them, it's kind of a lot of data to go with at the same time. So it's best you just focus on one and then use that as a base. Bitcoin seasonality, I mean, it's going to be updated because the main reason the Bitcoin seasonality and probability hasn't been updated is because I'm not trying to deter people from trading Bitcoin, but I would normally wait for Bitcoin halving to happen, because right now there's a lot of, I don't know if you guys have heard about CBDC, right? So the new digital currency based on blockchain coming out. And because of that, they're trying to tint crypto as being bad, but in reality, it's still crypto that they're most likely still using for the CBDC. So so it's not necessarily end times, it's just monetary structure moving, but it could be very, very dangerous in the wrong hands. If they're not using it correctly, then it could literally as you just said, it could be used to control people. But if you have several CBDCs and it's not a specific one centralized, I'm guessing some of them will have loose policies while some of them will have very strict policy. Then you can decide whichever you want to operate in. But ideally, it's not to put all your eggs into one basket and just operate within one CBDC. It's to operate within several, so that way they cannot take you off of the radar. Hopefully everything is not centralized, because if it is, then oh well, that's going to be very bad. So let's look at USD. So currently right now we're in the 12th. Let's see. So we're currently around here in the trend, right? Now with this, what we can see is 38 years seems to be saying downtrend, 5 years seems to be saying up, 15 years is also saying up, or a little bit of consolidation. I wouldn't even want to touch this till around here. So till the 24th, I wouldn't even want to touch USD, right? Merely the fact that, there isn't much clarity in this. Now, that would be my consensus on this. I'd rather take it safe. So for that reason, I eliminate USD out of there. And what I'm basing my reason is on, maybe, I don't know if there's anyone here that doesn't fully understand what I'm doing, but what I base this consensus on is this, right? If you have full alignment between the 38, the 15, and the 5 years, so all three has to point towards the same direction, only then would we take that move. You understand? And currently right now, right here, they're not really pointing in the same direction. I mean, I'm not talking about 2 days moves. I'm talking about a week, 2 weeks moves. Those are the best ones. A week, 2 weeks, a month. Those moves are good because, as you've seen in gold, for example, those moves tend to last longer, and you tend to take a lot out of your trades. I mean, gold was aligned around this period for us, and about 1,785 pips. If you're still holding, you're still profiting 800 and some pips, which should probably pop up a little bit, then go down, and that's the end of the move. So for that reason, USD comes out of the equation. I won't even touch that. So let's look at Euro next. Okay, so with Euro, it's looking slightly similar. I mean, but the good thing is all three are pointing towards a downtrend in Euro. Now, currently, right now, we're here. So tomorrow market is right here. So with Euro, for example, you can actually trade Euro going down, right? So euro seems to be on the short side. So if we put euro on the short from, let's say, 13th, there's a 13th, then what could happen is, let me just check. It's not going to be a smooth ride. You're probably going to get a pullback. Now, keep in mind, we do not have COT, so we are not totally sure if this is the right move, because COT will have shown us if these guys were selling or they were buying. So if they were selling, this would be good for us, but we definitely know you're going to get a pullback at some point. But euro could drop up until the 2nd of March. So there is that possibility. Euro could drop until 2nd of March. AUD will be the next one. So let's see what AUD is saying. AUD, we are right here. Yeah, AUD seems like it's an uptrend, but the 36 years looks like it's going to be a very bumpy one, for example. So, but it is an uptrend, but it's a bumpy one. I'm not going to front about it. To be quite frank, since there's no COT report, I would not want to touch it because it's too bumpy. And even the euro, you know, there's that. So the next thing is to check the news to see if we have anything for euro. So we don't really have anything major on euro on Monday. There's just small stuff. Tuesday, small stuff. Wednesday, the only thing we have is that, but it's medium. And yeah, we have to watch out for this guy speaking on Wednesday. So Thursday and Friday. So euro seems to be clear. It's just a little bit. The thing about news is I don't really watch the news. The only reason I'm looking at the news right now is mainly because COT isn't available, right? If COT was available, I wouldn't even come here at all. As I said initially, there's 3 ways to look at it. That I personally look into the market. I look at the past, which is historical, which is a seasonality that we'll be looking at right now. Then I look into the future, which is the probability, you know, and then the present is the COT report, which shows me what's most likely going to happen in the present. Now, because we don't have that, I have to resort to this. Normally, I wouldn't even come here. I mean, the guys that have been with me for maybe over 3 years knows that I would never come here. It's very rare for me to be in the news section. So I don't really teach people how to read the news. I believe it's just noise. You know, it's just noise. If you notice, the news goes, when the news comes out, it goes in one direction and all of a sudden it comes back again. You know, so NFP is a primary example. You know, you get excited, you make some money, then boom, it's all gone. So for that reason, I don't touch news. Euro looks more like a smooth sailing, except from Wednesday when there's going to be that presidential speech. You know, so but in the meantime, what we can do is we can look for all the euro pairs. So if we look into euro pairs, for example, so I don't need this anymore. We want to see which one is in alignment at least 3 days from where we want to go in, right? So 3 days in alignment, because if the move doesn't happen on the first day, it's most likely going to happen on the second. And if it doesn't on the second, on the third day, definitely would happen, pushing us in our direction that we want to go. So that being said, we already know that, you know, euro is going to go short from the 13th, right? Now, because you know that, what's most likely going to happen is it's not going to happen on all of them, but it's now to select the right one that you know it's most likely going to happen with. And if we get the right one, we can hold that trade, you know, till most likely March, right? So if we look at it, this is February, right? February, we're going to go to February 13th, which is tomorrow. So So Euro CHF, for example, looks like we have a long, long, and then we have short, long, long. So for that reason, Euro CHF comes out of the equation. We don't need that because that's telling us that it's going to go up. We don't need that. The next one is EUROJPY. So EUROJPY is telling us we're going to have 2 days going down, 1, 2 days, 3 days going up afterwards. I do not like the view of that. But in reality, if we look at the 13th, right, which we look at right here, we have that falling 2 days, then 3 days going up. It does really look like an alignment. 2 days going down, 1 day going up, and then all of this is going to be bumpy. So EUROJPY might be an option, but it's not really ideal. So I'll just keep that at the side. It's just something you can watch on. And then the next one is EURUSD. We have, let's see, what do we have here? So we have 2 days going down, 50-50, 3 days coming up, 2 days coming up. I still leave that at the side. It wouldn't be my first option. If I find one that has more going in one direction, then that's perfect for me. So EuroAUD, we have 2 days going down, 50-50, then 2 days coming down, which is good. The week after that, we have 1 day going down, 1 up. So we have that. So the first asset we're going to have for that move would be EuroAUD, right? So we can short that exactly something like that. So I'll just put that probability. So this is the future we're looking at. We're looking at what's going to happen in the future. Okay, so yeah, it looks, wait, hold on. Yeah, it looks like we should be out of this actually on the 24th, because after that, yeah, the 24th will be a good exit. 24th. So if we can get that, that would be great. Then the next thing, it will be EuroGBP. GBP is quite unstable, to be quite frank. But so we're looking at Euro dropping across GBP heavily, actually. So yep. So it kind of holds the same fate as EuroAUD. So EuroGBP also doing the same thing. Right. So we don't really need the EuroJPY anymore, the EURUSD, because those don't really align the way we want it. Then the next thing is EuroCAD. We got 2 days down, 50-50, up 50-50. So EuroCAD comes out of the list. We don't need that. EuroNZD. Let's see what we have. So we have 3 days down. That okay. EuroNZD 23rd. So go EuroNZD. Will come out on the 23rd instead. And that's it. So now we have 3 assets. Just by analyzing 1 euro, we have 3 assets that we can combine. And so if we look at this, let's look at EuroAUD, for example. Let me see. Right here. So EuroAUD, we have this right here. And let me just play on the chart. Okay. We have EuroAUD, right? And what we're expecting is euro to go down. Now, looking at it from the month already, like you can see the momentum for the upside is already practically almost done. So this is February, so we're expecting it to drop. So this little candle is going to turn into, a red candle going down. If you have yours as red and green, it should ideally turn to a red candle on the monthly side. But to know exactly when to go into the market, I tend to do I tend to do this. So where is that stuff? So I tend to do something called candle wick display. And this might look slightly funny, but it does work, I assure you. So I calculate the wick side to the, if I'm going down, for example, I know this week is most likely going to be a red candle, what I tend to do is I calculate the average wicks of the white candle over a period of time, and then I divide that by, the amount of candles I'm calculating over. So in this case, we have a few to look at. We have this, we have that, we have that. So we'll do 28 plus 47 plus, hold on a second, plus 73 plus 29 plus 226. That 226 kind of shoot it out of the park. Then I divide that by 5. I mean, this is now primarily up to you. You can choose to do 7 candles, 8 candles. I just normally default do 5, but you can do 7 candles, you can do 8, you can do whatever, you can do 14 if you want. But just make sure that how many candle wick you calculate, you divide it by the number that you choose. So if you did 1, 2, 3, 4, 5, divide by 5. But I just found I just do the recent 5 just to keep it simple. So if you divide that by 5, you get 80.6 pips, right? That's what you get. So ideally, the wick should go somewhere up to 80.6. So somewhere around here, right? It's not going to be accurate for me right now because I'm not really trying to make it accurate. But in your case, you should just make it a little bit more accurate because it's going to give you a range, right? So let's just call it 83. And then you go to the daily section and you do the same thing, calculate the previous 5 on the daily. So if you get like 44 plus, so I'm looking at just the down candle because I'm expecting euro to drop, right? So I'll look at the week at the top side, 44 plus 10 plus 28 plus 21 plus 17. And then you divide that by 5. So that will give you 24 pips and right around, so 24 pips should be around here. Yeah, right there. So now what I have is this. I have this range right here, right? This is my entry range. Look how wide this is. This is extremely wide. Yeah, so this is extremely wide. And what you can do to make it even a little bit more precise is if you have any support and resistance indicator, if you turn it on, it should give you an ideal zone. And this is what my support and resistance giving me in between here and here. So this, as wide as it is, oh, this is too wide. I must have made an error. This is way too wide. Apologies, guys. I've made an error somewhere. Apologies. Just get that. Hold on a second, guys. Made an error. The pip size is too wide. I made an error in my calculation for that one. Let me just share my screen again. Let me see, it should work now. Okay, so I made an error in the calculation. This is way too wide because if we look at it from the weekly, it shouldn't be up to that. Let me just delete this. It shouldn't be this wide. I must have calculated from the top right here rather than me calculating from the bottom right there. So let me just quickly, I'm just going to quickly run this again. 28 plus 47 plus 73 plus 4 plus 226 divided by 5. So that's 80.6. Okay. So what we're gonna do is move that somewhere down here. Yeah, now that looks more accurate. I'm gonna have to move it a little bit higher, but yeah. Let's just say around there. So now you have this range right here, right? So if you look at that on a daily, right, if you put in any support and resistance indicator, for example, it should give you something you can use. So let me get that in. So it should give you something. So mine is giving me this entire segment. So what I can do is go down on the 4 hours, for example, and I can delete this indicator. Actually, now I can delete the candle week one, make everything a little bit neat. So on the 4 hours, I don't have any zone within my support and resistance. If I go on a 1 hour, I just want to see if I have any zones in there. If I do, then what's going to happen is my 1 hour isn't loading. I don't know what's up. So my 1 hour isn't loading, but if you have a zone, just like, let's say, for example, in mine, I have this red line going across right here, then ideally you want the market to pull up a little bit somewhere into the zone. And when market pulls into the zone, that's when you start looking for your entry. But if market hasn't gotten into that zone yet, then don't take the trade, right? So that's how primarily this operates. So I'm just going to delete that. So primarily, that's how this operates, right? So you wait for the price to pull into the zone, and then when it's in that zone, you can then sell. So, and then you decide to sell. So now, even if you sell, you need stop loss, right? And you need take profit. So this is where average true range comes into play. And you can use your average true range on a daily or 4 hours, depending on your account size. Account size will determine this. Now, keep in mind, this is not financial advice. I'm just stating my own personal opinion and my own personal view of the market. So But I think this one might not be as good as the other one. I can hear this one. Can you hear me better on this one? Mr. Oluwa, share the next. That's the next. Okay. I'll